Was good, chat. I just wanted to make this little quick video um regarding not PPRs, regarding BPRs. It's really a matter of precision and patience when it comes to choosing BPRs over regular IFVGs. And I honestly learned my lesson today. I'm going to show you guys. If you already saw my trade recap, you already understand the context of the trade that I took and the conditions and qualities of it. But here we are once again. I'll just go over it. This is a 1 hour A plus liquidity setup. It has a 1 hour gap and then a protruding 1 hour swing high inside of it. We end up sweeping it, but we don't get a BPR. We don't get a BPR. Um, as you can see, it's a series of candles. It's not just one candle that does the inverse. It's a one, two candles. Is that why this trade failed? I really couldn't tell you. Maybe it's because we're on a much slower commodity compared to NQ, or maybe the true reason is because it wasn't a BPR and we couldn't get that full delivery. I don't know truly, but I do know that a BPR on NQ ended up working. Um, as you can see, we had, and once again, the level's always gonna show off and work for us. We have a 1 hour fair value gap right around here, right? 1 hour fair value gap, 1 hour swing low inside the fair value gap. Ended up getting a 3 minute BPR, correct? So candle, 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 fair value gap, and then the next candle right after ended up inversing that fair value gap right there. That's what BPR is. Um, I honestly think I should break down what a BPR is for those who don't know. So I believe I'll do that right now. A BPR is balanced price range, okay? So BPR means balanced price. Okay, so you're probably asking, what does a balanced price range look like? A balanced price range is essentially when two overlapping fair value gaps overlap, essentially. So let me show you guys a bullish example. So we have our bullish example. I'm sorry if it's a little loud in here, guys. I'm in the airport trying to get this video out for you guys. So right, so you have a series of up candles, correct? In that series of up candles, you end up creating a fair value gap. Let me make these boxes green so I can truly show you. You guys can truly visualize.
Agent Garcia, Gomez Torres for Detroit. Let's go.
Let me make these green so you guys can really see and make these boxes green. I want you guys to truly visualize it. Um, you have a series of up candles, correct? But then right after that series of up candles, one candle decides to engulf the whole fair value gap, and that is what a balanced price range, aka BPR, is. Okay, it's when a series of candles creates a fair value gap, and one candle engulfs the whole fair value gap. Okay, it doesn't have to engulf the whole series of candles; it just has to engulf the fair value gap to create an IFG slash BPR. So why is this so important? Balanced price ranges show three things, okay, guys? They show three things. They show three things. One, volume. Balanced price ranges show a bunch of volume, guys, because guess what? If we didn't have volume, there would be chop. It wouldn't be this, right? It wouldn't be an inverse fair value gap. It wouldn't be an engulfing huge volume candle, right? It would end right here. It would end right here. Or it would continue to go up, correct? Or it would just have a little wick and then stop right here, okay, guys? So when we see a balanced price range and we see a candle engulf a series of candles, that's how you can kind of detect that there is volume in the markets, okay? Number two, similar to volume, but delivery. Delivery is the most important thing, truly and honestly, in trading. You can have the greatest setup, you can have the best liquidity, you can have the best risk management. If there is no delivery within the market, you really won't find success because, once again, like I said, with volume, there will be chop. There will be indecision. There will be indecisiveness. So I feel like it's really important to go over that and really, how do I put it? It's really important to highlight that we need volume and delivery, right? We need both of those for balanced price range to show itself. Now, third and finally, balanced price range shows us that the market has volume. It shows that it has delivery, but lastly, balanced price ranges help us with risk management as well. Now, why is that? That is a good question, and I'm going to show you guys right now. Let us say this: we don't get our balanced price range correct. We don't inverse on the first candle. We don't inverse on the second candle. We inverse on the third candle, correct? But now that third candle has ended up all the way down here. That is exactly what happened here. Not as if it's not like me entering up here would have helped anything, but the risk management will always, always, always be better. Okay. Usually. Usually it will always be better. Because instead of entering right down here, you're entering right around here, correct? So now that you guys understand the difference between a balanced price range and an IFVG, I want to show you guys some quick examples of what this looks like in the real market. So let's get to it. All right, you guys. So I have another setup for you. I just wanted to show you guys this and why balanced price ranges are so important when truly using the model and trying to find the best trades to take. Um, the setup came from a previous day low, correct, from Monday. Okay, so Monday, this was the previous day low right here, PDF. Let's mark that out. That was incorrect. I do this the right way. Mark that out. Okay, so we end up sweeping previous day low in pre-market. My alert went off. I thought it was a lost cause when I saw this wick back up. I thought price action was once again not delivering correctly. I didn't think it had the correct value. But in reality, we end up re-sweeping the previous day low sweep, correct? And we end up making, we end up making a BPR. Okay, so we get our previous day low sweep, big wick. That was a previous day low. I keep emphasizing on that because that is a form of liquidity that is highly slept upon. Okay, previous day lows. As I was saying, we swept previous day low and then we re-swept the sweep of the previous day low. And this was right at the prime time of 9:30. So I literally entered right when 9:30 began, and this was a absolute banger off of a 2-minute BPR. Held this for about 122 points. I could have did way better. Stops were about right here. This was a solid 3-1. So I just want to show you guys BPRs truly can change the game. I want you to use BPRs from the time frames of 1 through the 5 minute while using liquidity of 1 hour, 4 hour, and the daily. You can mix and match, see what you want to do, and see if you can find something that works for you. But this is what's been working for me, and I hope it works for you next. So thank you for watching this video. Tune in to the giveaway we'll be doing for the 1K member celebration. It's going to be huge. We've came a long way. We've got a lot more to do. I want to thank my brothers that have helped me get here, my family, and obviously, most importantly, God. We got a lot more work to do. Let's just continue to put the work in and show up every day. Proud of us, and thank you for watching.